Yo, what is good, y'all? It's Decrypt back with another video, and today I'm going to be going over the updated version of supply and demand. I don't want to waste too much of your time, so let's just go ahead and jump right into it. Alright, y'all, now we are on the charts, so let's go ahead and just dive in. But first, well, let me go ahead and get rid of all this. But first, the very first thing we have to cover is what is supply and demand. So basically, supply is when there is heavy selling. Heavy selling equals large supply. And when there is heavy buying, that is large demand, right? So heavy selling, supply, heavy buying, demand, boom, simple. All right, now that you know what supply and demand is, now let me go over what time frames I like using supply and demand on. So the charts I like using the most for supply and demand are the 1 hour, 30-minute, and the 15-minute. My favorite being the 30-minute, but I'll get to that. So let's start with the 1 hour. How do you find supply and demand? So on a chart definition of supply, you're looking for a drop, a base, and a drop, right? So a drop would be heavy selling, and then a little bit of consolidation where the market just moves a little bit sideways, and then followed by another heavy sell-off, right? So here you can obviously, we had a large sell-off, a little bit of consolidation, followed by a large sell-off. And what are you looking for? You're looking for the candle that started the move. So you might think this candle at the very top up here is supply, but look how large this candle here is compared to these. So would you consider these little candles being a sell-off, or would you consider this being a sell-off? This one candle covered from 404 down to 400, a $4 move in 1 hour. So that's a pretty large sell-off. Only big money can do that. So keep in mind, we're following big money. This is a smart money concept. I say smart money concept because it's really just people with large amounts of money, like hedge funds and billionaires that are trading these markets that can manipulate them. So instead of us trying to predict the market, let's just wait for big money to make its move and then we follow. So that's exactly what we're doing here. So you see big money make its move right here to the downside, and now we have to market, right? So you see that the move played out. Even if you missed it, doesn't matter. Now you have a for sure trade. Now you have an A+ setup that you can take. So this is what you're waiting for as a trader. It doesn't matter how long it takes. You're looking for the highest probability setup, and this is it right here, supply and demand. Now let me show you how to market. So on supply, it doesn't matter what time frame you're on, you're always going to start it from the top of the wick of the candle that started the move. So you're going to market here to the bottom of the body close, and then you stretch it out. Boom. So obviously it played out. This supply zone we had already marked in the premium or in the Discord, and took a trade off FOMC, and we absolutely smashed it. We made so much money, but I won't get into that. But now that I've marked it on the 1 hour, you can move into smaller time frames and just wait for price to come up and retest the zone, right? So here you can see that price dropped on the 30-minute as well, created a little bit of a base, and then dropped again. So that is heavy selling also. This is, so you could create your demand zone on the 30-minute there as well, and then also on the 15-minute, but I'll show you guys clearer pictures on different time frames. So now that we know where liquidity's at, we know where big money's at, where they place their orders, all we have to do is wait for price to come back up, retest this zone for us to short it, right? If you haven't watched my top 5 mistakes I wish I would have avoided as a trader when I was starting out, please watch that video. It's super helpful. But yeah, in that video I cover and say you have to have a plan, your entry, your exits, and then also discipline and patience, right? So here we have our setup. This is our trade. Now we have to have our entry level, which is the second we touch the zone. So if I were to target previous lows, which is down here, boom, like so. Set my stop loss very tight. Everybody's stop loss is different. So set yours accordingly. And then obviously here you can see that price came back up to this supply zone and rejected really heavy, right? So boom, that's how you set your supply zone. And then every single time you come up and touch the zone, you're going to look to short it, right? So over here, we recently had FOMC. Let me just do this. Boom. Then we have previous lows down here. So I'm just going to move my trade there now. So Now that we have our previous lows marked based off our previous sell-off, then we could wait for price to come back up and retest and take our trade there. And a lot of people will tell you, don't trade on FOMC, don't trade these heavy news days because they're bots and they don't know how to trade. Don't listen to them. If your setup aligns with news, basically all that means is that there's going to be a lot of volume that day. And if, say, price is approaching the supply zone as FOMC or news is about to drop, I'm still gonna short it. I'm not gonna have a bias just because I think this financial literacy rate hikes, this, that. None of that matters. Trade the charts and play news alongside with it if it lines up with your trade. So in this case, FOMC price was chopping all the way up, approaching the supply zone as FOMC approached. So I took the short, and yes, we banked off of it. Another thing I want to point out when locating supply and demand is look how fluid the left side of the chart looks compared to this little uptrend that we had. Look how it's just real clean, real fluid compared to this choppiness right here. The buying was weak, approaching a supply zone. That alone should tell you that this supply zone is being approached and the buying is getting weaker and weaker and weaker. If you're a pattern trader, you have sort of a rising wedge, so everything lines up with each other. Obviously this ain't perfect, but you guys get what I mean. But yeah, so when people tell you that patterns don't work, it's just because they don't know how to trade. Patterns do work. They're continuation patterns, reversal patterns like double bottoms, head and shoulders, inverse head and shoulders, whatever it is, bull pinners, bear flags. You get what I mean. But yeah, don't let anybody try to tell you different. They all work. It's all the same thing. All the charts are the same. To each their own. So just trade everything as you know. So now you know how to find supply. I showed you how to find it, how to mark it, how to execute a trade off of it, and yeah, now you know the plan or what I look at when I'm looking at a trade. And both of these examples were trades that we actually did take. Here's all the proof. Boom. Yeah. Profits daily, you know how it goes. But yeah, I only took 2 trades off of this setup. Why? Because it only touched the zone twice. This is an A+ setup. This is the trade that I would go heavy on and be fully confident in taking. So if you want to be successful and you want to be a profitable trader, you have to have patience. You have to wait and only trade A+ setups. If you're sitting there every morning trading the first 5-10 minutes, don't question why you're not successful or you're not profitable. The truth hurts. I'm not here to sugarcoat and make you feel better, try to motivate you. No, I'm going to tell you the truth because that's the only way you're going to learn. And you may not listen, but at least you know or have it in the back of your mind. When you make those mistakes, you know what it was that you did wrong so you can fix it. But yeah, this is supply. Now I'm going to show you guys how to find demand. So this is demand right here. It is literally the opposite of supply. Right? So you're looking for heavy buying, not heavy selling. You're looking for heavy buying, right? And then you're also looking for the candle that started the move. Here in this case, you see a large move to the upside. Only big money can do this, right? So within 1, 2, 3, 4 days, SPY went from 387 all the way to 402, right? So that's what, a $15 move. I don't know anybody that invests in the market that can move the market like that unless you have billions of dollars, right? So this is obviously big money here, but you want to find the candle that started the move, right? So here you obviously see small baby candles leading up, and then you see this one large candle just go, and then it's followed by several green candles, right? So I know the definition of supply and demand. On demand, it would be a rally-based rally. You don't really see a base here, but if you zoom in on a smaller time frame, you can see that took off and then kind of like based a little bit, next day gapped up, boom. But yeah, if we look at the 30-minute, it is clearly demand, right? So this is the candle that started the move, obviously. So we're gonna mark it the opposite of supply. You're gonna go from the bottom of the wick to the top of the body close. The reason I choose the body of the candle is because the wicks are where price rejected at. So price couldn't fill those orders and it pushed back down a little bit. The sellers won that one little area of liquidity, so this is where your liquidity would be at, right? So all you got to do now, since you marked the demand, is you stretch it out. Boom, doesn't matter how far you stretch it out, just give yourself time for it to retest, and then boom. So now, you know, like the opposite of supply, you're gonna place your risk to reward. You have your trade, target previous highs, set your stop real tight, boom, and then now you just wait for price to come down, retest, and then you enter your trade down here. If price does not hit your demand zone, there is no trade, right? So I'm waiting patiently until price hits my demand zone, and then I'm in. So boom, like the opposite of supply, you have your trade, your A plus setup, which is demand. You have your entry level, your risk to reward, and then all you got to do is stay disciplined, have patience, and execute, right? And this is also a valid trade that we took. So yeah, these are all proper examples of supply and demand. Super easy, super simple. And now I'm going to show you how to find it on the 15-minute. So boom, here's an example on the 15-minute. Here you have large red candles. Look how large these candles are compared to, you know, these other ones. And then this one does have a drop, little base, and then another drop. So what you're doing is you're basically just marking your supply on the 15 minutes, same thing as every other time frame, no difference. Stretch it out as far as you need. Just give yourself time for it to retest, and then every single time price touches this supply zone, we're gonna short it, right? So if we have, boom, set our risk to reward, so stretch it out, target previous lows, which are down here like so, and then obviously you can see price rejected not once but twice. Well, technically 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times. And you may be wondering why I trade on the 5 or 3 minutes sometimes, and that's just so I can get a better entry. Once I have my supply or demand set on the 15-minute, I'll move into smaller time frames, 5 minute, 3 minute, whatever you prefer, and then I'll use that to get like a sniper entry. And then once I'm in my trade, I just hold, move back onto a larger time frame, so I'm not really worried about the price action. And then yeah, set my stop loss, step away, and I'm good. You know, in this case, we never hit our stop loss, never got a candle close above, so I never got out my trade, and then boom. And the same thing, if you set your supply zone on the 1 hour, you can zoom into the 30 or the 15-minute and trade off those 1 hour supplies. Or if you're on the 30-minute supply zone, you could, or demand zone, you could zoom into the 5 or 15-minute and take your trades off those as well. So it's all the same thing, just depends on what you prefer. But it all works the same, right? It all works the same. Like here's a 15-minute demand zone. So if I were to mark this demand zone here, bottom of the wick, top of the body close, boom, you just wait for price to come back down and retest like so, target previous highs, and then set your stop loss, boom, stretch it out, give yourself time as much as you need, and then every time it comes back down, you'd want to take the trade off of that. And then in this case, we didn't hit our target, but like I said, by then I would have already been on my trade, taken my profits, and walked away for the day. But yeah, guys, I hope you found this super simple. Drop a like, subscribe, leave a comment, leave some feedback. But yeah, stay tuned for more videos. I'm out of here.